What is happening, you guys? Michael here. It is, I think, my 95th YouTube episode, and I finally convinced my beautiful wife, Jill, to come on and expose herself to the YouTube community. Welcome, Jill.
You didn't convince me, you let me, finally.
Right. I finally let her.
I made it.
Anyways, this is a really cool episode. I actually ran down to Jill 2 days ago after I was looking at our net worth spreadsheet, which I haven't looked at in actually several months, and realized that we just became millionaires.
Woohoo!
Yeah, and honestly, it's not as glorious as it sounds. I think a lot of us, when we're younger, picture millionaires driving a Bentley down to the dock to hop on their multi-million-dollar yacht, throwing cash in the air. And it's really not that for most people. So I just wanted to talk to you guys about how we did it and then run through our net worth spreadsheet to show you exactly what it means to become a millionaire, because it's actually not making $1 million per year or whatever you guys may think. For those that don't know, to have a net worth of over $1 million, that technically means you're a millionaire. So taking your assets minus all your liabilities, and then that will give you your overall net worth. So Jill, how does it feel to be a millionaire? Do you feel any different?
No, not at all. I mean, we do have some exciting news, which does make it feel a little bit better, but no, it's pretty much the same. It's just exciting and, makes us more hungry for more growth and
So
crushing it even more.
Maybe we'll do an episode in the future. For those that are new to my channel, our net worth has grown substantially by investing primarily in real estate. We do invest in the stock market a little bit. It's not the fancy, Bitcoin or Dogecoin like everybody else is talking about on the internet, but investing in short-term vacation rental properties, and it has provided substantially, higher cash flow than we had initially predicted, which has been great. So the cash flow has set us financially free, meaning we have far more income than we need to actually pay for our daily or monthly living expenses. But beyond the cash flow, it's the equity in those properties that has grown over time, and then using the cash flow and leveraging the equity in the current properties to acquire more real estate. And then when we get to that net worth spreadsheet, you're going to see how this adds up to over $1 million between our real estate, our cash, other investments, and other assets. So for context, when I met Jill in 2015, she was working at Domino's, and I was had just graduated, or we both had just graduated.
Was I bartending too?
And bartending. She was bartending at nights, so side hustling. I was like, I like this girl. And so she always spoiled me though with random little gifts and surprises, which
dinner.
Yeah, and dinner.
Everything.
And I was like, man, she can't be paying for everything. But I have no money, so I finally got a job at Dunkin Donuts, and then I actually went back to school for a fifth year, and she was, I guess, in graduate school or getting...
No, I was working. And in school.
And in school a little bit. And then I was working at the mailroom. I was known as Mailroom Mike, making the big $9 an hour. It was a big step up from Domino's, so I could pay for some dinners and dates. So that's honestly how we progressed, and then we left in 2016, moved to Dallas, and started working in corporate America, and worked our way up, changed jobs, changed companies. Both of us did several times, changed cities, moved from Dallas to Austin to Nashville.
Changed careers, industries.
Yeah, so we both focused on sales and getting into jobs where we could take greater control of our earnings.
Yeah.
Which I think was smart because, you can't save your way to wealth or financial freedom, whereas most people can't.
Yeah.
So for us, it was side hustling on the weekends. I worked at a vineyard. She bartended.
I coached.
She coached volleyball. So a lot of late nights, a lot of, weekends sacrificed,
yeah.
Right? And a lot of time with friends sacrificed to chase, some greater goals that we had, which ultimately was financial freedom. So before we get into the net worth spreadsheet, I wanted to bring it back with Jill and just talk about some of those, early ambitions. And I remember I was gung-ho on real estate after reading a few books, like the classic, like Rich Dad Poor Dad, Cash Flow Quadrant, other books, and watching a ton of YouTube and learning about the cash flow potential. Do you remember what your initial thoughts were? Did you think I was crazy when I said, hey, let's invest in real estate?
Honestly, I don't think so. I know you started reading things, which I feel like initially I was like, maybe it's just one of those things where I'm going to read a book a day, or I'm going to go to the gym 3 times a day. It's one of those, it's it may last, it may not. And then when you were like, hey, I think we should buy a house, I was like, what? I was like, I guess. But I trusted you that you did your research, and, we're going to wing it. If it didn't work out, it didn't work out. We always had a plan B and a fail safe. So I was like, well, there's no way for us to not succeed in any way. So I was like, let's go for it.
Yeah, and I think the biggest light bulb moment for me personally was actually reading a book called Cash Flow Quadrant. I think I read it about 2 years ago. We had already moved to Nashville at this time, but it was still before we bought our first ever investment property in 2019. And it was the perception of risk or perceived risk by investing your money into things like real estate, the stock market, Bitcoin for that matter, other assets that truly put money into your pocket versus spending money on liabilities, which take money out of your pocket every single month. So that perceived risk, that it kind of flipped it on its head when in the book they're talking about the risk of relying solely on a 9-to-5 job for your income. Because what happens if you lose that job or the company tanks for whatever reason,
and all your savings are tied up,
and all your savings or investments are tied up in like a retirement account, how long could you go before you run out of money?
Yeah.
And that was like, that all of a sudden seemed a lot riskier than investing as much as possible in things like real estate that can pay you monthly cash flow. And when you think about it like that, it kind of de-risks the investment as long as it's a calculated investment, calculated risk.
Yeah.
And you're tight on your numbers. So I think for that at that moment, I was like, I'm ready to just invest as much as possible. And
what you mean by tight on your numbers is basically just knowing your numbers, ensuring that you're good even on a bad month, or something terrible goes wrong, like the washing machine breaks or whatever. You always have a backup plan. You always are prepared for anything, and that's what I think you mean by tight on your numbers. So that's how I felt comfortable with it, where there's no way for us to fail or get in a hole or really just not succeed, or
Yeah, I think before we dive, I am going to dive into this spreadsheet because I want to show you guys the actual assets and liabilities so you can see how it adds up. But one last point I wanted to make was I think we would have gotten started earlier if we had known that you didn't have to know everything when you first get started. I think that was our biggest holdup, was we felt like we had to know everything about, for example, real estate. We had to know all the ins and outs about the different loans, how to work with agents, what different strategies to do. And I think that held us up for a long time because we were afraid of making a mistake or losing money. But if we got started earlier with strategies that don't take any money to get started, co-hosting on Airbnb, wholesaling, arbitrage, which takes a little bit of money. I think we would have got started earlier and honestly reached this probably like 2 years ago. But all hindsight, 2020. I think our path was what it was, and we're super happy to be where we are right now. And the future's looking up. But let's go ahead and dive right into the spreadsheet. I want to show you guys exactly what I'm talking about, what it looks like to be a millionaire. And it's not going to look super sexy on paper. And it really isn't, honestly, in real life. It's not like we're making $1 million a month or something like that. But
like we drive a Volkswagen and a Honda, not anything crazy.
Yeah, not anything crazy. Not yet. Maybe someday. But I did order the Cybertruck.
Yeah,
but
that's true.
That's the benefit of having a real estate cash flowing asset to pay for the liabilities versus just working, trading time for money and save up for the car. So anyways, let's dive into the spreadsheet. All right, so we're in the spreadsheet here. I'm looking at my phone. I'm going to show you guys the screenshots from it. It's titled Elefante Dream because Jill loves to title all our spreadsheets. We have a lot of spreadsheets.
Gotta have a goal.
Right, so our goal, we have a lot of goals in here, but one of them is just our rental properties, and then the next tab is the net worth spreadsheet, which includes the rental property stuff. So I'm going to show you guys the starting property value, what we bought the properties for, and for a few of the properties, we did a lot of work fixing them up. Some cosmetic, some more involved renovation, which took the property up in equity substantially because it was, or what's known as forced depreciation. When you put work into a property, the after repair value and now the new rental projections and what we're actually seeing month to month, the similar properties that have sold in the area, that's what I'm comparing the new value of the property to be at. And that's what most appraisers will do or investors will do when they're looking to buy a property. So I'm very confident that we could sell these properties at a minimum of what I have it listed for.
So in other words, for people like normal people like me and you to understand all this, you buy a house, you fix it up. Now that house is valued a lot higher because you did a lot of renovations, it looks nicer, and you have rental income that makes it more valuable for other investors. AKA the new value of the house is a lot more than what you previously purchased it for. So that difference of what you purchased it for and what the new value is that forced appreciation or forced equity, which is now basically cash, right?
It's cash equivalent. I mean, it's equity in an asset. So if you were to sell that house, that new value of the house, like all of that is yours to keep.
Which is you've heard the term sweat equity. So we put in the work, make it more valuable, and then now we are like cashing it in, essentially.
Yeah, essentially. I mean, our net worth has grown. So I'll show you guys a spreadsheet. So here are the starting property values. So we have 4 short-term rental properties and then our primary residence, which we're turning into a long-term rental here in the next month. So our starting property values are as noted. Now you're going to notice the last one here is $249,500. So that last row is actually half of what the actual values are because we went in 50-50 with an investing partner there. So the value of that house we actually purchased at $499,000. So just note that all those numbers are divided by 2. So we're going to look at the...
which is a good option sometimes if you are short on cash or short on intelligence or whatever, or skill set. You can go in on some property with another person and it's half the money in, also half the money out, keep in mind. But if you do a great job, it could still be very profitable.
And a lot of people actually who don't have money will find an investor who does, but they don't want to put in the sweat equity.
Yeah.
That's an amazing opportunity for you guys to maybe split the equity or get a portion of the equity, or if not, they get all the equity because they put up the cash and you split the cash flow.
Yeah.
So a lot of ways to carve up a real estate partnership, right?
Totally.
So if the next column is the estimated property value, and I'm fairly confident and honestly conservative in these estimates because I look at similar properties that sold in the last 12 months based on square footage, number of bedrooms, location, and also rental projections.
Yeah.
And we are above most of these in rental projections and the property values around this. So
and you talk to local realtors
and talk to the realtors that we worked with to buy the properties
advice.
to give some confidence in these numbers. I want to make sure I'm not throwing out inflated numbers that are BS for you guys. I want to make sure that this is accurate and good info for you. So the estimated property values are as noted. So you're going to see in the next column I have, earned from appreciation, both natural appreciation or forced appreciation like we talked about.
Yeah.
And then we have the amount left to pay in the loans. We didn't buy all these places cash, right? We leveraged the bank's money to control a much larger asset. So for most of these properties, we put anywhere down from 10 to 20%.
Yeah.
So how you get the estimated equity is you're going to take the estimated property value minus the amount you owe on the loan, and that gets you your equity position in that asset. So what's really cool about this is we're going to add up all of the cells here in the equity column, and that totals $1,061,570, which we are now net worth millionaires according, just from our real estate assets. So this doesn't even include the cash or cash equivalents or other investments we have, which I'm going to show you guys on this next tab here. So let's dive into the net worth tab, and I won't show the exact account names that these are in, but we have several different checkings and savings accounts that we have our emergency savings in and money that we're saving up for future investments. So that's $10,000, $48,000, $6,500, and then $5,857 and $65,950. And then I have a couple different investment accounts with Webull and Robinhood. Also, if you guys want on Webull, if you see the link in the description below, you click on that and you can get 2 free stocks valued at, I forget what it is, between $5 and $1,000 per stock if you click on that link. So
you can't beat free.
Go check that out. Seriously, it's free. I'm affiliate partner with them. So I've just opened an account with them not too long ago, and they have a great platform. So go check that out. And then Robinhood as well. So that's, between those 2 accounts, I have $17,500 in there invested in various stocks. And then I still have some money left over in a 401k with the previous employer. That is at $29,200. So if we add all this up, we get $183,007.
Yeah.
So now we're going to go over to the, where we're going to calculate the total net worth. So we have real estate, which is $1,061,569, and then we have total cash and other investments, the one we just calculated, and that was $183,007. And then we also have a camper van that we purchased to travel with, and the value of that van is around $95,000, and the current debt we have on that van, because we took a loan out, is $75,000. So the current equity position there is $20,000, and then Jill's little Volkswagen EOS. Estimated value of $1,000.
If that.
So
it still's running.
We may take that out, but and then we have an HSA account, which is a health savings account, which has just shy of $8,000 in it. So if you add all of this up, And this isn't including other stuff that we own, but I didn't want to be nitpicky
Oh,
on
yeah.
what we added into it. But if you add all this up, $1,273,268. So it's pretty crazy to like keep track of this. And I started keeping track of this probably a year ago after reading a couple different books when the authors are encouraging people to maybe have accountability partners. For me, it was my wife, Jill, but I have a couple other real estate buddies and they do this as well. And it's something smart to do. Keep track, not just a personal budget. You guys should keep track of a personal budget. Keep track of the money coming in and money going out. But keep track of your investments and your net worth, because ultimately that's your path to becoming a millionaire. It's not finding a job that
Or
pays
wherever you want to be. It doesn't need to be a certain number.
It doesn't have to be a million, but keep track of your net worth. That's important to keep track of your assets and how they grow, because you guys can tap into that equity as you grow older and leverage it for other things in life. Maybe retire a lot sooner than you thought you'd be able to.
I feel like a lot of people honestly just don't know where their money is, don't know where it could be. They don't know, they don't keep track of this kind of stuff. And when you do, you kind of realize, oh, well, what could I do to be better? Or where could I put my money that could make it grow faster, whether it's in real estate or stocks or really anything. But just being knowledgeable, I think, is the first step.
Yeah. So anyways, we don't feel any different than we did when we had $50,000 or $100,000 or no money. It feels a lot more like relieving and comforting, but that's more from the cash flow aspect from our rental properties, being financially free. Like we've never felt this good. We still stressed out about a lot of stuff, but it's not.
Just different.
It's a lot different than being stressed out about like, okay, I need to make sure I have enough money to pay
rent,
the lights, rent, and things like that. So I think the first step for us was creating that personal budget and just being very
100%.
strict about it.
Yeah, and you don't realize where your money goes either. Like
how much you spend dining out.
Yeah,
right.
Coffee.
Yeah. So, anyways, the point I'm trying to make here is it's not super glorious, but it is important to track this stuff. And you guys, if it's achievable for us, it's achievable for anybody. 5 years ago, we're Dunkin Donuts and Domino's making very little money. But we had big goals and aspirations, and we found a way to get there. So our path can certainly be replicated. I'm sure there's thousands of other people that we've followed, in their footsteps. And it doesn't have to be the exact same either. You can find other ways to get there. It doesn't have to be real estate. It doesn't even have to be the stock market, but it's important to invest in assets that put money into your pocket and pay for the liabilities in your life. I think that's the biggest takeaway.
Yeah, I think, honestly, throughout this entire process, we've always been trying to motivate other people and that's why you've always been super transparent with all of your numbers. And, sometimes money is kind of a faux pas topic to talk about, but that's the only way that we can all get better. Or not better, but just like grow the way we.
I don't think talking about money needs to be taboo, faux pas, whatever you want to call it.
Yeah.
I think the more open we are, because the only way we learned was learning from other people that were open about it. Whether it be YouTube or books, like sharing information is so crucial and important.
Yeah.
And there is with the way the internet is set up right now and YouTube and all these other channels and places that you can get information, there is no better time than now to just go out and learn whatever you want to learn. And honestly,
knowledge is free sometimes.
Most of it is free.
All of this
knowledge.
is free.
Anyways, if you guys aren't subscribed to this channel, feel free to subscribe.
Hit the button below.
We're super open and transparent about money and finance and investments and how we do it, and hopefully can provide, shed some light and encouragement for all you guys. Hopefully this isn't taken as us coming on here and saying, oh my gosh, we're millionaires, because that's certainly not how we want it to come across. We just want to provide encouragement for all you guys out there. And,
and it's not like we're like the top 5% here. There's people that we look up to, and we
there's
admire. There's always room for growth.
Doing more, but it's just about what your personal goals are in your life and working your way to achieve them. And for us, honestly, the net worth thing is great, but it's a lot less about money now. It's a lot more about time.
Yeah.
So investing in assets like real estate that pay us monthly cash flow, we became financially free, so we can do really whatever we want with our time because that money's still coming in.
Yeah.
Right. So
you can always replace money. You can't replace time.
Exactly. So money and investments, honestly, is just kind of the tool to get you that time, because you can kind of buy yourself time, right?
Totally.
So anyways, guys, that's it. That's how we became millionaires at 27 and 28 years old. You guys can do it too. It may not happen overnight, but it can happen a lot sooner than you may think. So Let's give it up for Jill for her first ever
Thanks.
YouTube episode.
Am I allowed to
Honestly,
come back?
A lot more flawless than most. Usually I have to edit and chop up a lot, but it's like you rehearsed this overnight.
You know.
Yeah. Anyways, guys, thanks. We'll see you next time.
See ya.